Ira Epstein of Linn Associates with your morning flash update for this Wednesday, the 18th of September, 2019. It's FOMC day, friends. So at 1 o'clock p.m. today, we're going to see the FOMC announcement. It is no longer widely expected that we'll get a quarter-point cut. It's talked about. Some factions think so. But you do realize we've gone from a 90% guess that there would be a rate cut 2 weeks ago down to last night we were at 51.9% guess. That is a radical change, and in all honesty, the economic data doesn't warrant it. Therefore, as I see it, this is more of an insurance cut again, that the Fed has been saying that they want to do a preemptive move of types. So we'll see if they go ahead with that. The other news of the day has to be that the President Trump just instructed the Treasury Department to substantially increase the sanctions on Iran. Now, I don't know what substantially means. I don't know what more we can or cannot do. But we're going to see a press conference today held by the Saudis. They will bring their fragments of materials that were fired at them. I don't think there's any doubt that Iran supports the Houthis and others. So I don't know that that's the smoking gun. I think you have to figure out where these missiles came from to be the smoking gun. And it seems very odd to me the president has sent Mike Pompeo to be at this meeting in Saudi Arabia. So there's something of a smoking gun, I'm assuming, in hand. We'll find out what that is and what the complications are. Then we have next week the UN meeting. Remember, in that meeting, the UN receives all these delegates. The U.S. has not yet issued visas for the Iranian delegation. If today is really the smoking gun, why even bother with it? We'll see if we can do that. As you can see, the gold pretty much unchanged. Silver down a little bit today. The copper market down another penny. Stock market, this is what I call the waffling in front of everything. Jeffrey Goodluck of Capital Line came out, and I read his report, and he really believes that we've seen the low in U.S. interest rates for the remainder of 2019. So that 1.4% in the 10-year, important to him. You can see that even with the monster run-up we had the other day off of the attack on the Saudi oil fields and refinery, the market has been giving back quite a bit. We get the EIA number in a few minutes. We'll see where that goes. Grain's quiet, a bit in the bonds and the notes, but you know that can disappear just like that once we see what the Fed does. As we take a look at today's data, as I just said to you, the Fed ordered the Treasury Department to substantially increase tariffs on, not tariffs, but sanctions on Iran. Then, here's a stunning number. The U.S. housing starts, they came out up 12.3% to 1.364 million units. They expected up 4% to 124. I had seen numbers up to 127. These are blowout numbers. This is the best number probably since 2007. So it's quite a big hit, a positive one. Permits up 7%. They expected it down 2.7, and they even revised to a better number, the July number. Is this finally the point where these mortgage rates that have gone down, and they've gone down very substantially. They've, as you can see here, if you take a look, the rate is now down dramatically. Just in recent weeks, 3.6% from the week before of 3.75, and a year ago the rate was, in the last November, 4.94%. So is that finally moving through and we're getting the housing part going? That's what's been missing for years. The mortgage market headline, you can see the prior week we went to 5.695, about where you were before. The index, 269.7 versus 259.3. That's good. So the purchase index shows people want to do it. And I don't know that they're going to do anything in the refi here. Rates are staying already in this rate, so I wouldn't think too much has to happen with that one way or the other. Canada's CPI rose a tenth, 1.9% from the earlier month. That was below the expectation of a 2% rise, so I'd be cautious there. Gasoline prices down probably helped that. And in Japan, I bring up Japan right now because the Bank of Japan ends its two-day monetary policy meeting tomorrow. These numbers stink, in plain English. No other way to say it. Exports for the year. 8.2% versus expected, down 2.3. So that's way bigger. Almost every category was down on it. Their trade deficit, instead of 346.3 billion yen, down to 136.3. I think it's going to cause the Bank of Japan to ease monetary policy, whatever that means. They're so easy as it is right now. So an interesting day. You're going to have the Fed, you're going to have the Saudi comments, you're going to have Mike Pompeo there. He may say something. Buckle in is the only thing I know how to tell you to do. And when you're buckling in, I've already covered a lot of this by, it's right now 9:15, right? By 7 in the morning, I've done a different video trying to help you from second guessing yourself. First, I'm going to cover a lot of the detail that's going on in Europe and in the US and in Europe. Next, I'm going to throw out my trade ideas to say exactly buy here, sell there, put a stop here. It is meant for both the intermediate and the shorter term swings. I'm not dealing, hey, we're going to buy gold and you're going to hold it for 2 years. You're not getting that. I do that in my gold reports, or my metal reports as I call them. This is all about helping you start your day off thinking like this. Ira, if I could call you in the morning and ask you, what should I do in the market today? This is what it's about. And then I'm going to prove it by looking at the chart. It does not mean I'm right. You're asking me what I think of the market. That's what I'm going to think. So points of entry, exit, profit objectives, stop losses. Not all trades work. That is a guarantee. You'll see me be stepped on. You'll see me look like a hero. Actually, the recent trades in gold have looked pretty good. I'm going to cover everything like this, just like this in this order. And you're going to have a slider bar that you can move on the bottom of the video. It'll pop up. It's going to say metal markets. It might say interest rate futures. Wherever you're at in it, it's going to tell you where you're at. And there'll be a lexicon on the side. In other words, an index. You can click that to get to the same thing. It is not intended, this video, that you have to watch the whole video every morning. I'm going to record in this sequence because I don't know who you are, what you want. But I know time's important, and you might want to see exactly what I'm saying, exactly what my trade recommendations are. And no, you're not going to be able to see this on YouTube or other websites. It's got to come through our products. It is a subscriber video. It's very inexpensive, 26.5 cents a day for the first 30 days. After that, you have 2 ways if you want to stay with it. And you don't have to stay with it. You can stay with every 30 days after that automatically for $15. You can buy a 1-year subscription for $156. Now think about that, 3 cents in the grains. In the gold market, it's $1.50. Silver's 3 pennies. It covers the whole year. You also get a $40 a month free phone app. So you're going to be able to be it an Android, be it your Apple phone, it'll go there. If you want real quotes, you can get them. Charts, our news, and of course, everything that I'm doing here on these videos are going to pop up right for you. If you take my written subscription, that will appear in there too. So all of this for $7.95. Who are you kidding? What do you have to lose? $7.95 if you're a serious trader. Go to our website. Under the word education or research, Ira's morning subscriber video, it'll pull right down for you. You can click right up here to get there as well. If you're watching this on YouTube, it'll take you right to that page. And the simplest way, but we don't do this anymore, you can call us and my staff will help you. Don't tell anybody. I'm Ira Epstein. You have a good day, and I will talk to you all later this afternoon in our market wrap-ups.